Good day, everyone. Good day. And I can also say good morning, good afternoon, good evening, depending on the time you are watching this video. So welcome to tutorial session with Omar. Alright, so tonight we'll be looking at cost accounting system, unit 2. Unit 2 cost accounting systems. Alright, so we have our main content here. What is cost accounting system? Comparison between cost accounting and financial accounting, distinction between cost accounting and management accounting. We are going to also look at parts of a cost accounting system and then necessity for cost accounting system. So this is just the introduction of the unit. Basically, we are being made to know what cost accounting is all about. Say cost accounting may be regarded as a specialized field of accounting which involves classification, accumulation, alignment, and control of costs. So this is the essence of cost accounting, and the end is towards control costs. We want to find a suitable way in which we can mitigate loss and then maximize profit at the same time. That is what we refer to as cost control. So this is just basically the introduction. This is basically just the introduction. Now when we move down, our objectives here is to say what cost accounting system means, to compare cost accounting with financial accounting, to distinguish between cost accounting and management accounting, to discuss the different parts of cost accounting system, and to highlight the necessity of cost accounting system. So what is cost accounting system? Having known what cost accounting is, let's proceed to find out what cost accounting system is all about. Please take notes. There are two different things here. We have cost accounting, then on the other hand we have cost accounting system. So now let's look at what cost accounting system is all about. So a cost accounting system can also be called product costing system or costing system. So it is a framework that is used by firms to estimate the cost of their products for profitability, analysis, inventory, valuation, and cost control. So as we can see here, the essence of cost accounting system is to ensure that we have a robust and a organized estimate of the cost of products to enable the organization to maximize profit. So this is the essence, so that at the end the estimation of the products will be accurate, and at the same time the management can use this estimation to maximize profit. So this is the essence of cost accounting system. So we have aside from profitability as well, it also help us to the firm towards know the value of their stock. That's called inventory valuation. What is this? The valuation or the value of a stock or a unit per time. So the knowledge of cost accounting system or the establishment of cost accounting system will help us towards denote or note that. Then cost control, which is the last of it, and I believe we all know what cost control is all about. So this is what cost accounting system is all about. Now moving down, we are going to look at type of cost accounting. So we have various type of cost accounting. As you can see here, standard cost accounting, activity based accounting, resource consumption accounting, throughput accounting, life cycle costing, environmental accounting, and target accounting. So these are the type of cost accounting we have. These are the type of cost accounting we have. Okay, so doing a little research on this as well is going to go a long way when we check all of these things and know what it means. But let me just give a definition or a background knowledge or understanding of what a standard cost accounting is all about. Now, by the word standard, standard is usually referring to when a company or the firm sets a predetermined standard, a predetermined, could be a price, it could be a quality or whatever. But when there is a standard to something, right? So that standard is what the firm is expected to follow. Now, a deviation from that standard could result to what consequences, could result to um a shift from the organizational objective. So this is what referred to as what standard cost accounting, right? So a standard that needs to be followed, a procedure that needs to be followed. This is what referred to as standard cost accounting. Then we have activity based. Activity based basically means the level of activity that is going on in the organization, the level of activity, the day-to-day activities, weekly, monthly, how frequent activity is going on in the organization. This is the type of, it's also another type of accounting system as well, or cost accounting rather. So then we have the third one, resource consumption accounting. I believe we all know what resource is all about. Resource consumption. What are the rate of consumption we are using, right? The rate of consumption we are using to produce, the rate of consumption. It could be material, it could be labor, it could be expenses. So whatever resource consumption we are using, I hope we do not forget the three M's of management: man, material, money. So when we put all of these resources together, then the level of consumption is what we are talking about here. All right. Okay, so let's move down. Let's move down. Here we have the comparison between cost accounting and financial accounting. So most time people tend to use these two interchangeably, but there is a difference between the two of them. So here we want to compare cost accounting to financial accounting. Let's compare them. The first one we have here is that financial accounting aims at what? Finding out results of accounting year in the firm. In the form of profit or loss accounts and statement of financial position. But here, cost accounting aims at what? Computing cost of production or services in a scientific manner and facilitates cost control and cost reduction. This point is quite and well explanatory. What they are saying basically here is that the essence of financial accounting is to enable us to ascertain our profit or loss in an accounting year. So our activity from January to December, are we making profit? Is there a loss? The records and everything, all our accounting day-to-day activity, the purchase, the sales, the creditor, the debtors, the accruals, and everything puts together, the ledger and everything, the journal, everything, put it all together and do the the plus and minus, and then we are going to know from this statement or from this record if we are actually making profit or loss. This is basically the essence of financial accounting. That's why I call profit or loss. And then the financial position, which we also known as balance sheet. So the statement of financial position will tell us the financial standing of the firm, the asset base of the firm. This is basically what financial accounting is all about. Then on the other hand, when you talk about cost accounting, we want to know the level of production or service, or the costs. We are computing the cost of how much do we spend in producing a particular unit. Do you understand? How much do we spend in order for us to what? Facilitate cost control and cost reduction. If we are spending too much, we'll know, okay, next time we are going to this is what we need to do to get here. This is what we need to avoid to get here. So reduce our cost, which is cost reduction and cost control as well, because we don't want to what? Overspend. And that's the importance of cost record. When you have record of all your activities, it's going to help you in what? Making informed decision, right? Because you don't want to spend the way you spent in the previous year. So that is cost control and cost reduction. So I believe we should read through, be able to understand the comparison between both of them. But let's just have it at the back of our mind that financial has to do with money. Financial has to do with finance, funds, but cost accounting has to do with the costs. We want to determine the amount of money we spend for production of services. So this is one of the um, major importance of the comparison between the two of them. So moving down, we have distinction. The other one we check is comparison. Here now is what? What is a distinction? Distinction means the difference between what? Cost accounting and management account. Here we are going to look at scope, emphasis, the techniques that are being employed, at the evolution. Then we have the database. We have the database. So the first one is the scope. Let's look at the scope. The scope of cost accounting is limited to providing cost information for managerial use. Do you understand? Just for the management purpose. But the scope of management accounting now is broader than that of cost accounting, as it provides all type of information. Thus, mean therefore, management accounting is an extension of what? Cost accounting. So when you are referring to the basis of distinction now, we are talking about scope. Scope means the wideness, how large something is, and we are looking deeply into something. Now, when you look at it holistically, yeah, you will see that cost accounting is just is how will I put it now, just a part of what? Management accounting. Because management accounting has to do with the overall um, process. It has to do with the overall process, all the information we need. But cost accounting is only restricted to how to arrive at the cost we use for production. But management accounting has to do with all of these costs all together to help what? Management make what? Inform distinction. And that is why it's referred to in this point as the extension of cost accounting. Then emphasis, we can read through that, techniques that are being employed. So the techniques employed in cost accounting is a little bit different from that of management accounting. Various techniques used by cost accounting include what? Standard costing and variance analysis, marginal costing, cost volume analysis, budgetary control, uniform costing, and interfirm comparison. So these are some of the techniques that is being used in cost accounting. But in management accounting also uses techniques of cost accounting, but in addition, it also uses techniques like ratio analysis, fund flow statement, statistical analysis, operation research, and certain techniques from various branches of knowledge in mathematics and economics. So we can see here now that they are telling us that management accounting is a broader term, is a wider scope, wider term of what cost accounting. Management accounting will use the technique of cost accounting, and at the same time we still use other technique to what complement that of what cost accounting. After they've used the technique of cost accounting, they will also use what ratio analysis, fund flow statement, statistical analysis, operation research. And as if that is not enough, they will still use what knowledge of mathematics and economics, models, techniques, formulas, and all of that, linear equation, everything they will use it. So this is a fact that management account is more of a wider scope, is more of a wider term. It's like it's an umbrella. So the cost accounting is under management accounting. If you ask me, so that is what they are trying to say here. Then we have the evolution as well, database as well is there. Okay, let's go to part of cost accounting system. So by part of cost accounting system, we have five parts. We have an input measurement basis, the inventory valuation method, the cost accumulation method, cost flow assumption, and all of that. So let's see if we can take them one after the other. Sorry. So we have the input measurement basis. Now the basis of cost accounting system begin with, don't forget we are looking at the types or the parts of cost accounting system. The parts of cost accounting system. So the first one is what? Input measurement basis. Now the basis of cost accounting system begin with the type of costs that flow into and through the inventory accounts. And there are three alternatives under the input measurement basis. We have the pure historical costing, the normal historical costing, and the standard costing. So these are um the three alternatives that is under the input measurement basis. And when you talk about pure historical costing, you are referring to the past record that has happened in the past. So it's basically history, costing that is historical in class, has to do with history. So this is what the first alternative is. In pure historical cost system, only historical costs flow through the inventory account. Historical costs refer to the costs that have been recorded. You can see costs that has been recorded. So these are costs for direct material, direct labor, and factory overhead. So factory overhead is still referring to the factory expenses. So the second one is what? The normal historical costing. So the normal historical costing uses historical cost for direct material and direct labor, but overhead is charged or applied to the inventory using predetermined overhead rate per activity measure. So what they are saying here is that we are still using the pure historical costing, but the difference here is that our overhead, which is our expenses, will be charged or it will be applied to the inventory. Do you understand? And it's going to be using predetermined overhead rates per activity measure. So it's going to be a predetermined overhead rate. I already explained what predetermined item is all about, something you know beforehand. Do you understand? Then we have the standard costing as well. It is a standard in a standard cost system, all manufacturing costs are applied or charged to the inventory using standard or predetermined prices and quantity. The difference between the applied cost and the actual cost are charged to variance accounts. So let's look at inventory valuation. So these are the inventory valuation methods we have. Inventory valuation method we have. Inventory valuation method. Don't forget, we say we have parts of cost accounting system. And the first one is an input measurement basis. Now, under the input measurement basis, we look at pure historical costing, normal historical costing, standard costing. Now we are looking at the second item we have, which is the inventory valuation method. And here are the inventory valuation methods we have. These are them. These are all of them. Throughput, direct or variable, full assumption, activity based. You can see the definitions there. They are all here in our material. We can go through them and form our notes for ourselves. You can see throughput method, direct or variable method, full assumption method, activity based. So activity based basically means the level of activity, right? The level of activities that is going on in the firm. Now let's go to the third part of let's go and look at the third part of cost accounting system, as we can see here, which is the cost accumulation method. Cost accumulation refers to the manner in which costs are collected and identified with specific customer, jobs, badges, orders, departments, and processes. So do you understand? All these um jobs are collected together. They are costs that are collected and identified together. You understand? So that's why they call it cost accumulation method. So all these costs are what collected together. They are collected and they are identified together. So this is what cost accumulation is all about. Then job order, I explained that in unit 1. Job order basically means when you are doing job based on customer specification. A customer is telling you, I need produce me 5 carton of let's say of maybe apple or so. So you are not going to produce, or um you are not going to produce beyond 5 carton of whatever quantity the customer is requesting from you. So that's the first one, job order. So you do that job based on the customer's specification, processes, back flush, all of these things. They are all here for us to go through: back flush, hybrid or mixed method. Then the fourth part we have here is our cost flow assumption. A cost flow assumption refers to how a cost flow through an inventory account, not the flow of work or products on a product line. Cost flow assumption. A cost flow assumption refers to how costs flow through the inventory account. I hope when we hear the word inventory is still the same thing as stock, your stock. Inventory, stock. You can be opening inventory, it can be closing inventory. So they are telling you that how the costs flow through the inventory account, not the flow of work or product in it. So we are basically focused on our inventory account, how costs flow into it. This what refers to as what? Cost flow assumption. so we can see. And here we have the types of cost flow assumption where we talk about the scientific identification, talk about first in, first out, which is FIFO. We have last in, first out, LIFO. We have the weighted average, and like that. We also had the simple average method. Maybe it was not captured here, which is SAM. So like that. Then the last one we have the recording interval capacity. Recording interval capacity. So here is just basically talking about how your inventory can be maintained in a perpetual or in a continual basis. How you can record your inventory. Maybe it can be daily, it can be weekly, but you are doing it every now and then, taking account of your stock. Maybe you have a particular goods in your warehouse, and then you are just taking inventory every now and then. It's being done continually, repetitively. That is a repetitive actions. The repetitive action, you are doing it repeatedly. So that is what we refer to as what? Recording interval capability. Now we have let's look at the necessity for cost accounting system. Why is accounting system necessary? Why is it necessary? What is its importance? We look at the analysis of what? Profitability of individual products, services or jobs. Like I said earlier, it's going to help us to know if we are making profit in a particular job. It's going to help us to know individual products. If we go back to the definition, we are going to see that they are just downloading the definition here as the importance when we look at the definition of cost accounting systems. The second one here is what? The analysis of the different departments or operations. So it's going to help us to know the analysis. We'll be able to analyze the different departments or operations. So we have quite a number of importance or reasons for cost accounting system. This is number 3. We have it here. Number 5 says it will assist in setting the process so as to cover costs and generate an acceptable level of profit. So we all have all the importances here why we study cost accounting system. We can just go through them and then we are good to go. So let's look at our conclusion. Cost accounting is used by manufacturing firms to record production activity using a perpetual inventory system. In other words, it is an accounting system that is designed for manufacturing firms for tracking the flow of inventory continually through various stages of production. Let's look at our summary. In our summary here, we consider cost accounting system as a framework that is used by firm to estimate the cost of their product for profitability analysis, inventory valuation, and cost control. So we also look at the comparison between cost accounting and financial accounting. We look at their differences as well. We look at the parts of cost accounting system, and we also highlighted the necessity or the importance of cost accounting system. So that should be all for unit 2. I believe we've understood this unit. So till we meet again, this is section with Uma. Bye for now.